Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have today? Well, the market finally cracked, and it makes me think of a couple of stories. Every morning, if you're in the den, you're probably, and if you're not, you're probably missing something. Just before Larry's show or during the first part of Larry's show before trading starts, I try to post as many aphorisms to try to get all the stinking thinking out of my head for the next 6.5 hours so I can move on. You know, of course, the worst part of any trader is himself. You're always fighting that. But I had to think very hard about a couple of things. And one of them was a story in Jesse Livermore's book, Reminiscence of a Stock Operator, when he's talking about the earthquakes in, I think, 1906. And he's talking about it, and he says, he's thinking, and, the earthquakes came, even back then you could get the news in 30 minutes through the teletypes and everything else that happened. But a big earthquake in San Francisco. He checks it out. The train yards are destroyed. So he instantly thinks, you know what? There's nothing going in and out of that. It's going to hurt. That's the biggest seaport at that time, much bigger than Los Angeles. I think 3/4 of all the stuff that was coming in and out of the West Coast was coming through San Francisco at the time. So he says, you know what? I got to short this market. And 1 day goes along, and 2 days goes along, and 3 days goes along. Everybody kind of ignoring what he thought was something that was self-evident. And, of course, like on the 4th or 5th day, the market really starts headed down as everybody else kind of starts scratching their head and going, well, those train yards are decimated. There's not. It's going to be 3 months before they have those things moving again. There's not all that trade, all that stuff is going to slow down. And I think in the next couple of days, it fell off real hard. He collected some massive short positions. Of course, back then you could have 10 times margin. And he was the kind of guy that would do that. He was lucky that it didn't go up and push him out right when it happened because the market didn't go down. A lot of times it'll just run you out, but I think he's pretty good about laddering in and laddering out. So he didn't get hit all at once, but he would have fairly large positions, and he added through those 3 days. And it always makes me think that it's not a losing position just because it slightly goes against you. Normally what you want to do is put in a stop and go, okay, this is where I know I'm going to be wrong. And especially being short, you may be wrong several times before you get it right. When you get it right, though, especially back then when he was working 10-to-1 odds, as long as you didn't throw all your money away at once, just break even, you only had to be right 1 in 10 times. So a lot of people that didn't have proper money management, and he was one of them, but not all the time. But if I remember the book and the passages, he speaks a lot about that particular time as something that made him as a trader. And that is that why a lot of people will ignore things for a handful of days, eventually the market does catch up if it is something real. And you don't always have to be right. As we start the show off today, we're down 35. Well, let's update this just to make sure, because I know it only updates every once in a while. We're off 35.5 points on the S&P cash. Dow 30 is down 250. Nasdaq's down almost $100, and Russell 2000 down 25. We've been talking kind of all week that I was expecting the market to fall off and through next week, almost a perfect storm of things happening. And one of I was kind of talking about, it kind of turns into a market of sell what you can because the Chinese markets are closed. You can't sell those stocks, so sell what you can. And it tends to be a market that if you get this during something like Christmas vacations and thin markets, it becomes something like, well, why are you selling this really good company if you think it's going to be doing well for the rest of the year? Well, I got to sell it now because guess what? I can't sell the other thing that I got to sell that's tanking or will tank. And, of course, what happens when China opens up? If the markets continue moving down over a week, do they just open up lock limit down if there's even a lock limit in China? I think they actually instituted some. It's a good thing for me to look at after the weekend. But, it's I spent a couple of people actually emailed me this week about all the work I did, about 14 straight days on trying to get a model for shorting highs. And this morning it was screaming. So I added a bunch of more shorts right after the open. But got some nice positions. Already had a couple from the last couple of days. But, we're going to talk about a handful of things. But one of the things I think is when we've had these, this is the second time I did go through the virus scare of whatever it was, 2002 or 2003. And I do remember watching some of the PBS specials about the big flu epidemic of 1918 that killed more people than the plague, and how there weren't any samples of it still around. So they went up to Iceland and Greenland where people had died from it. And, of course, they'd put them in the permafrost. Those people were as good as the day they dropped them in there, and they were able to reconstitute the flu virus from back then. But what is the difference between what makes a pandemic and something that's just a blip on the radar when we look back several years? Two things. One, the time it takes to gestate, because if you can move around for 2 weeks, that's a long 2 weeks, especially if someone's traveling. Even back in 1918, remember that it took a week to come across the oceans. It wasn't anybody being over there in 7 hours and coming back in 7 hours. It was, it was something where these people led a long trail of people behind them that may not get it for another 2 weeks. The second thing that becomes really important for that is something I'll talk about when we come back from the break. That's what they call in the business a teaser. We'll be back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Had a good question when we went to the break, and that is, what's the schedule for next week? Well, the Chinese New Year runs all the way through next Friday. So next Thursday night, when the exchanges open, that'll be a big deal, especially if our market has gone down all the time that their market's been closed, and they open up for the giant whammy, which would be interesting. Of course, we don't ever take that kind of time off, and the reason why is exactly for what's happening in China right now. And that is that in the past, in fact, one time I remember about it, they had a hard time keeping up with the data. This is back in the 20s or something. They closed the market for an entire week just to get everything back up because they were lagging so far on the paperwork following the markets. And when they did, something happened during that time. And I mean, it like bankrupted a whole bunch of people. This was even back in the go-go days. And the idea was that you got to be able to get in and out. We're closed on weekends, but futures still trade starting Monday night. I think that you want to pause the markets occasionally just to keep them from auguring into the dirt. But you know what? It is one of those things where you want to make sure that you're very careful about what you wish for. I don't think I want to trade 24 hours a day. I think spending about 8-9 hours a day at this is a big deal. Anyway, next Friday these open up. If the market continues up or continues down, just expect that we'll probably see a lot of selling of what they can sell compared to what they can't sell. What else are we talking about here today? Okay, I got some emails here. Okay. Short position in Tesla is still too high from Wayne. AMD still doing fairly good. I wouldn't look at those. In fact, we were talking about it earlier in the den. We brought up early in the week The ones that would probably do the worst which were cruise ships, hotels. We added casinos, which I didn't think about till I asked if anybody else was putting stuff on the list. Anywhere where you're going to do it, retail, which hasn't been doing very well, could be really hit. And of course, that gestation period is what really is the killer for this virus, and that is, what happens to all those people along the last 2 weeks, and then those people fan out. If you can get it when it's very early, that's one thing. The downside is how many people travel out of China these days. When the Ebola virus hit in Africa, the nice thing was that they were poor, which led to more of the disease, but it also meant that these people weren't traveling very far. It was a lot easier to contain. With as many people that are moving around in China and have gone to already different countries, it becomes a big, big issue. And we saw when people couldn't move very fast back in 1918 what happens. But don't expect this to blow over early with a 2-week gestation period. This is something that's probably going to be on the radar for a while. Oh, I was going to show you today. Somebody asked me, because I made a comment in the den. I've got one of the little testers that you actually use to track temperature, and I'll bring it in here after the next break. I'll run and get it. But I think I bought mine for $12 or $15 from Harbor Freight. But it's got a little laser on it. You point the laser where you want to go. Click the button, you get the temperature, and they're reading the foreheads of everybody's temperature coming off the planes, which is something that they weren't able to do in 2002. These things weren't cheap or available. They actually literally had to take the temperature the old-fashioned way, or by shoving something in somebody's ear, or the other place. Ugh. So this is going to make it a lot easier to find people that are symptomatic. But again, there's 2 weeks with people not being symptomatic. And, of course, the other problem is some people are just flat-out carriers. There were 2 papers out here today showing some models that could be quite scary. I'm not going to, since there's no way to prove those models in advance, I'm not going to drum the beat up. I'm just going to say that until this thing rides its way through, which is going to take about 2 weeks, we're about 1 week into it. I don't see that a lot is going to change until next week, and whether or not we get a lot more people symptomatic come next Thursday or Friday. But that's it. Got a bunch of emails here, so we'll talk about that. Got to do a little history, so why don't we do that, and then we'll move on.
Then it's all just a little bit of history repeating.
On this day in 1935, sliced bread has a companion. Canned beer makes its debut in a partnership with the American Can Company. Gottfried Kruger Brewing Company delivered 2,000 cans of Kruger's finest beer and Kruger's cream ale to the faithful drinkers in Richmond, Virginia. 91% of the drinkers approved the canned beer, driving Kruger to give them a green light for further production. The reason why, you didn't have to have a nickel deposit on each bottle, which they had to happen there. And, of course, there was a show on PBS for a long time called Connections. And I can't remember the name of the guy's first name, but it was Burke. And he went through all the connections of all the things that had to happen for a particular technology to actually work over time. And, of course, the ability for us to have cans was really changed by the ability to process aluminum or bauxite in its natural form. It took almost 40 years, but at the time that the original patents were being done, I think in the 1890s, aluminum was 4 times or 5 times more expensive than gold. And the Washington Memorial Peak, they put an aluminum top on that thing, however old that is. But at that time, they were worried about people stealing it because it had such an enormous worth. Of course, today, people throw tin cans away all the time. They're not even tin. They're aluminum. But we think of them the same. But a lot of times, a lot of things take a lot of years to come and develop and move through the system. We're probably a little faster these days, but not a bad thing. When we come back, we'll start looking at some other stuff, talk about what options are telling us. In fact, we're almost what options are telling us for the day today. We're off 42 points on the S&P cash.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we were talking about earlier about these little handheld devices now that will remotely tell temperature. And of course, they're made for shooting at engine blocks and looking at different cylinders or pointing at things. I use it for electronics. If I'm looking for a bad chip or seeing if something is failing in electronics, you can get the temperature without really doing anything. Just point the laser at it, and in fact, you probably see the laser right there. But I mostly use it for pointing at the air ducts in the air conditioning, checking them every once in a while to see whether or not I need to have the Freon checked in the AC, which is the most important thing in Florida. It's what gives us civility. We'd all still be killing each other like 10,000 years ago if it wasn't for air conditioning down here in Florida. So we've got that. But I paid someone was asking me, I paid like $12 at Harbor Freight with a coupon for these things. And this is deadly accurate. So it's not like something that for $12 doesn't work. I've had it for, I don't know, 5 years or something. I'm sure they're even cheaper now with the Chinese. But, it's they're just pointing at people's heads and pulling the trigger. And if they're too hot, you go over there in the bullpen. So I think we've got some new tools. What isn't going to be or is going to be a problem is it's only going to hit people that are symptomatic. And one thing, too, is I was going to say the biggest second thing in these issues is that they mutate. And it's not uncommon to see the mutations happen over and over again. In fact, there was a big wave of the 1918 flu, and then it kind of went away for about 3 or 4 or 5 months, and then it mutated in one that was twice as deadly. And the ones that are twice as deadly, mostly they mutate to less severe or even benign versions of viruses. But about 1 in 10 times over history, they've been able to figure out that these things actually get worse. And that's what happened in 1919 that wiped out, I think, 2 or 3 times the amount of people that it wiped out in 1918. And that's what the CDC and these other folks are really most concerned about. Not that the first wave is it isn't going to be bad. But is it going to be that roll of the dice where it actually mutates into something else? I was making fun earlier in the day of a great movie by the same guy that wrote Jurassic Park, and it's called The Andromeda Strain. In fact, I think it was his first big book. He was a guy, I think had a lawyer's degree. He was a doctor. I mean, the guy was like everything, and of course decided to write movies and books and direct, do other stuff. But pretty intelligent guy. But he wrote The Andromeda Strain, and of course, just when it was going to kill the entire world, it mutated into something that just ate rubber. But it was an interesting show. I watched it again maybe a year or two ago. Doesn't stand up very well in today's things, but I remember it scaring the bejesus out of me in about 1975. But yeah, go hide out somewhere in the woods is probably a good thing to do. Escape from New York, Snake Plissken, another favorite movie out here. Okay. Do you have any questions? Anything else? Was just going to get into what options tell me, and that was that we were looking for something around 3280 on the S&P cash for the low today. I think we've already gotten that, didn't we? Maybe during the break or something. 3281. Close enough for government work. And, of course, when we look at the SPYs, for some reason they're at 322 for the projection. Now, as I said the last few days, the patterns that you really worry about and that we're really going to worry about was a lower close either yesterday or today. We got a small reprieve only for them to hammer it out today. And I saw one of the first things I hadn't seen in a long time, and that was a sell program. I mean, we've had people try to make little mini raids on the markets before, but a concerted sell program to get rid of as much stock as someone could today. And that kind of hit the market early on, but I haven't seen one of those in a long time, but you could just see it rolling through the market. So someone had decided to pull the plug today, and probably a fairly large individual in the markets. Anyway, let's go back here. 322 is kind of where they're at. There's a big gap back here at about 319. You also have kind of a little reversal day back on the 6th of January. My guess is that's where we're going to be at in that range, somewhere around 321 to 319, maybe as low as 317. And since we haven't had a pullback in a great deal of time, that would be it. Now, does that mean it happens all at once? No. We've got our first real close underneath the 3x3 or 9-day moving averages. In fact, let's try going back to the displaced moving average. We've had all these days above, trending above. In fact, back to the first week of December in the SPYs. So now we've closed below it. Now, normally what happens is you go kind of sideways for a handful of days. You go above that high, and then you close back below it, and the bigger part of the destructions happens out there. Actually, if you're bullish, what you want this to do is not try to go back up higher again. You want it to sell off. You want it to come back here and base off on light volume at 320. If we get another push higher into this and then break this and then close back below it, that generally means you're coming all the way back to where this started. In this case, in the SPYs, that's about 313. So we're going to know here in a couple of days with a good signal on whether or not we get higher than the trend line. And if we fail on that point, then the destruction is much larger. Anyway, sitting at 32.85 on the S&P cash, 28.871 on the Dow. That's off 288. Nasdaq's off 114. We'll be with Tom O'Brien at 3:30. We'll be talking a little bit. One of the things I want to talk about anyway a bit is Intel's earnings. INTC. He said he thought he could type. And I think there's a lot more to it. We're going to get into that. But you did spike to 69.29. But this is very reminiscent of some other times of highs that we've hit in the past. Now, like I said, there's nothing in the signals here that say that it's the end of the world. Just that if you're thinking about buying, you may have up to a month before we find some kind of decent viable bottom that's more than just a half-day trade in the markets. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I got it there? Yeah, okay. I got to fix this thing, but I tried to fix it, but it didn't. Maybe I just need to buy a new cable. Maybe there's a wire broken in it. Anyway, yeah, we're going to bounce up a little bit, but I can't imagine that we're going to have much of a bounce before the close. But in fact, you could blow through some of those lows. But a very good question in the den that people don't ask much. And the Fed can't do anything about the virus, right? And the answer, will it matter in the long run? No. In the short run, they will. And that is, if you listen to these bozos on CNBC, especially economists, they all say one thing, and that is it's an orderly market. And as in some way, you lose all your money in 5 days is much better than losing it all in 1 day. Actually, very fast markets tend to get people out and over. So I'm not a big fan of economists. The old saying is economists make astrologers look good. But the idea is that they don't want it going too fast. They want it going slower. So does it matter in the big scheme of things? Not a lot of times. But what they don't want it to do is start blowing up other things because people are too leveraged. They want to take those people out slowly instead of scaring them all out at once, because too many times you get the equivalent of a flash crash when somebody does something bozo-like, the insane clown posse-like. And that's what they do. The Fed doesn't stop the markets from going lower. What it wants to do is slow them down. And that way, everything doesn't tend to blow up all at once. And people kind of adapt. People get short in the market, that happens. But very rarely will the Fed sit around and do nothing. And certainly the thought of letting another bank go bankrupt like they did in 2008, probably not high on the list of things that they want to repeat these days. So there'll be a little bit of that. But like I said, just a pullback in a normal market to 3220 on the S&P does nothing for the bull case. And we could just come back to where the market actually really broke out. And there's a lot of it. Now, I think we probably have seen a high in the semiconductor space, although we have earnings next week. I'll speak a lot more about that with Tom O'Brien at 3:30. But we haven't broke any downtrends in it quite yet. It's still the best sector out there. And, of course, quite the candle out here for having the biggest in the SMHs, which I think I posted it earlier, but I think there's only one weighting bigger in the SMHs than Intel. I think it's 10%, and the other one's 12%. of it. So it is a big mover. That it rotated all the way down with Intel being up 8% today says something. But you had a big move out here. It wouldn't be beyond the scope to pull back to 135 on the S&Ps. It just, even with Intel today, hasn't made a signal. I think this one may take a little bit longer to get out of there. We're going to talk about those reasons with Tom, though, in the next hour. Let's see what else we have here coming in. Celebrate Lunar New Year. Massive rewards. Till February 4th, complete the theme missions, earn golden coins, collect all 5 elements for in-game rewards. What is this? Oh, World of Tanks. They're trying to get me to do something here. Okay. Let's go back out here and see if we've got anything else going on. Rig count came out. Let's take a quick look at crude. Go to the OIH. Down a little bit here to see what we have for the oil fears dropped the most since May on fears coronavirus will hit growth. Okay. So what do we have? Where's it at? Okay, down $1.34. As I said before, I was kind of bearish on crude. That 1076 in the OIH looks to me like that's a fairly good shot. You never made it even back up to the previous highs in this, so that was kind of telling you a little bit. Question about the GLD. Really haven't looked at it that much. You got a little bit of a movement up. What you don't want is this thing to go below. You've been up 4 or 5 days above the 3x3. You're almost out of the danger zone, actually. 148.61 in the GLD gets you a breakout. What you don't like is the lighter volume so far today. You would have liked to seen something like the 22 million shares back on the 8th of January. But you don't always get that. But, you had a nice pullback to 145. So if you wanted to get long, that was the point to get long. I think there's probably a lot more money in a lot of stocks heading lower quicker and faster. Okay. Anyway, Baker Hughes numbers, as we said, last 3-4 weeks, Canada's been putting it on. They were flat this week, still at 244 rigs. U.S. was down 2 rigs at 794. We were at one point where we had 1,000 rigs. Those that couldn't make money got closed. But again, best cure for a high price is a high price. Canada, though, has been going bonkers and putting up new rigs for a while. To see VIX move today. Okay, got a question about VIX moves beyond 10% in a single day. And I would say that you want to look at the and not look at it holistically, but look at it more like a bin. And that is when the VIX is at 12 or something like that, and it goes up 10%, does it pull back? Or is that just when the VIX is 18 and it moves 10% in a day, does it pull back? I think you want to look at it in context. I don't think that you can look at it and just make a blanket statement that it moved too far too fast. When it comes off the bottoms, it tends to roll for a long time and blow away those 10% a day moves for a while. Generally, what happens is after it's moved up for a while, you get, and it's around 18, it tends to act very differently than it does when it just comes off the bottom like it has today. Now, you had that little pop yesterday. Man, did they sell the hell out of it, because that's been a way to make a lot of money. But you get to the end where eventually all the things don't always work the same. Sitting at 3283 on the S&P cash. I did not speak about volumes today. We're doing about 5.3 billion shares. So we are going to probably have 8.5, maybe 9 billion shares by the end of the day if this keeps up. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you'd invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And somebody in the den said Boeing did come out with a nice little pop here. And, of course, they're just back up to the resistance level. If they stay around this, 323. I didn't believe it when the news came out earlier in the week. That news was piped by somebody, or piped through somebody in the Congress. I always figure those people have an alternative mode or alternative motives. But we're just kind of really what we're back up to. But again, I never thought Boeing had a critical flaw. The biggest thing could be is if the virus thing does go a little farther than that it hurts the entire industry. But I just think somebody was trying to wash out as many people as they could. Of course, this has picked up a ton of shorts not that long ago, so I suspect it will probably do much better than the general market. In fact, any of the stocks that have had super heavy short selling probably are not going to be the ones going down the fastest. I actually shorted a stock this morning that had been short out the wazoo, only because the short interest in it had finally dropped in half. And we had a nice $5 move, $6 move in that this morning. But that generally when everybody gives up on it is a good time to get in it on individual stocks. So we'll have this moving along. And can they bust it up a little bit? Yeah, I still suspect before we get any kind of decent low in, though we're talking about 32.50, maybe a little lower, and certainly 322 on the SPYs. And, they'll try to slow it down. Everybody will try to patch it up. But I don't know. Options are pretty good, have been pretty good for a while on pointing out where the market's going. We'll be back with you at 3:30 with Tom O'Brien. In the meantime, so when you can, not when you have to. And we'll see you Monday at 2 o'clock Eastern Time over most of TFNN.